Hi there. My name is Shelley Kaiser, and I'm on staff here at Silverbridge CPAs. And I just wanted to share a little bit of information with you about cryptocurrency, the basics, and some of the tax consequences if you decide that you want to invest in crypto. So let's go ahead and get started. So, what is cryptocurrency? Well, as you may know, it's like a digital or virtual currency secured by cryptography. So it's not like a something physical that you can hold on to. It operates on a decentralized network, and examples would be like Bitcoin, Ethereum, or Solana. Those are just some of the ones that I've seen, and I think most people are familiar with those. So, how is cryptocurrency used? Well, you could use it to invest. You can buy and hold it, keep holding on to it as it appreciates. You can trade with it, so you can buy it or sell it for profit. You can also use it as payments for goods and services. And then there's also the earning. You could earn with it, like mining or staking, airdrops, things like that. So it's very versatile that way of the different uses that you can use crypto for. So just some of the storage basics about it. So it's stored in a digital wallet. And of course, these wallets are vulnerable to cyber attacks. So some wallets will charge you fees for the transactions. And then there's something that they call like a private key that acts like a password for your digital wallet. So if you lose that private key, it could cause you to lose access to your funds. And I don't know if some of you remember, it was a few years ago that somebody had forgotten his private key or password or whatever to his digital wallet, and he had like millions of dollars in his wallet. And I don't recall if he ever remembered it or got access to it, but I'm like, oh, that's a little crazy, a little scary. So some of the risks with crypto is, this cryptocurrency is highly volatile. So there's unpredictable price swings and they're rapid. And it's often driven by those social media trends on TikTok. People are going to, with TikTok, how, they post like, oh, this is the greatest thing you should invest in, blah, blah, blah. Well, sometimes, things are driven for that, just even with different products. So imagine what it would be with cryptocurrency. You're watching somebody on TikTok and they're like, hey, you need to invest in Ethereum right now because the price is so high, et cetera, et cetera. So I don't know. There's just a lot of high volatility with that. So there's a lot of security breaches. And the regulation on that, there's a lot of uncertainty with that. So I don't know, pretty risky in my book. And then there's also the security risks with, hackers and scammers. That's their daily job, trying to figure out how to scam people and hack into other people's, financial accounts and things like that. So to me, pretty risky stuff. Now, let's talk about some of the tax consequences when you own an investment. So let's put land in this place. So to kind of explain it a little better at first. So if you sell the land for more than you paid for it, then you're going to owe what's called capital gains tax. If you trade the land for another property, that's also a taxable event, most likely going to be a capital gain. And then if someone gives you land as payment for work, payment for services, that's treated as ordinary income at the land's fair market value. And then you're going to pay ordinary income tax rates on that, anywhere from 10 to 37%, depending on where you're at in your tax brackets. So could be kind of high. Now for crypto, let's go ahead and replace land with cryptocurrency like Bitcoin or Ethereum. Now the IRS, they treat crypto as property, not currency. So if you're selling your crypto, you're going to have a gain or a loss. If you're trading one crypto for another, you're also going to have a gain or a loss. And then if you're using crypto to buy goods and services, that's also a capital gain or a loss. And then if you get paid with crypto for a service or a job, that's again considered ordinary income. So there's a lot of capital gain loss stuff going on there. what exactly is capital gain? So short-term capital gain means you've held it for less than 12 months. And any short-term capital gains, you're going to be taxed at the ordinary income rates, anywhere from 10 to 37%. But if it's a long-term capital gain, that means you've held the crypto for longer than 12 months. And then you get the preferential rates of 0, 15, or 20%. Those are the capital gain tax rates. And those depend on your income as well. But I mean, if you're in the 37% tax bracket and you have a long-term capital gain, you're only going to pay 20% versus 37% if it was ordinary income. So just to kind of give you a little bit of idea there with what that means for capital gains. So some of the tax reporting requirements with crypto is one, I don't know, most of you, you see our questionnaire. We require you to answer if yes or no to digital asset activity. If you answer yes, then we're going to require more information from you. There's the form 8949 and a Schedule D. This is going to report capital gains and losses with all your crypto. It's one of the forms that we get is from Coinbase as a gain loss report. I mean, technically that's okay for now, but I think with the new implementation of this new form, the 1099-DA, we're going to see those instead. And that's what you're going to receive from your broker starting this year. So when you file your taxes in 26, you're going to have this form. If it's a Schedule 1 or Schedule C, you're going to report the income from mining or staking, more like a business. Schedule C is more like a business. And so with that, if you are doing mining or staking as a business, then you may have self-employment tax that may apply. And then, of course, with any income, net investment income tax, if you're a high earner, like starting at, I believe, 200,000 or more for single, you're going to pay 3.8% as a net investment income tax in addition to everything else. So just to keep something in mind if you're deciding that you want to add crypto to your portfolio. So here is the 2025 Form 1099-DA that I mentioned. So this is what you're going to see from your brokers. They're supposed to be sending those out starting for this year. So you'll get them in 2026 for the 25 activity. Now, before investing in cryptocurrency, we advise you that you speak with your financial advisor. That's our disclaimer, because we're not financial advisors, we're your accountant. And so the CPAs can help you with tax planning and things like that if you're going to decide to invest in crypto. Your financial advisor can provide valuable guidance and support, navigating the complex world of all the cryptocurrency with your goals and risk tolerance in mind. Personally, I wouldn't do it, but again, I'm not a financial advisor, but it's just too risky for me to even consider putting that in my portfolio. But anyways, so there you go. There's a little bit about cryptocurrency and kind of some basics and hopefully a little bit of understanding for you. So thanks for watching.